Right, so this is a belated video for the YouTube channel on the welcome page. Apologies, I've been away from the market. Haven't been doing anything in the market for the last few days. Now back to it. We've just had the RBNZ, much hawkish than expected, with a 75 basis point hike, but they had contemplated 100 basis points, and they've lifted the outlook for rates going forward. So they're pretty eager to get to an OCR peak as soon as they can, regardless of prospects of a recession. So let's put a big bid into the Kiwi today. There it is, there, the move. In terms of the cycle, we're sort of coiled here between last week's um, range, and I expect we're on the verge of a breakout, and this could be an expansion to the upside. Um, let's say, so if we're taking it from here to here, yeah, went into 63, and that happens to be where the 200-day moving average is currently as well. So that would be my bias while we're on the front side of the broader trend. Um, can't really see it any other way. I mean, there is money below the lows, um, so we might see some manipulation potentially. A break of 61.50. Um, but we'll have to see. I mean, if Tuesday is the peak, it could be either way because that's got a range expansion. So my best bet is to the upside. Um, but we're not taking positions on a whim and speculation, and we're looking for setups. So, but it's nice to have a bias coming into any particular session that you might be trading. So um, over here we trade predominantly the US session. So we've got Asia setting this up here, and we've got this nice move back into day one longs. Um, so I'd anticipate a move higher for the day ahead. Now, moving away from the RBNZ, despite there not being a video out on the channel, as usual, I put the analysis of gold out on the FX Street website latest analysis section. It's a For those that don't know, it's a analysis that I do every Sunday or Monday if you happen to be over in Asia before the market opens. That gives an insight as to where gold might be doing, what the dollar might be up to for the week ahead, key events that might affect them both, including yields usually. In this particular one, I didn't talk about much about yields, I don't believe. But nevertheless, we talked about the Fed and the impact that it's having on the market. We talked about 1750 being targeted, which we have reached at this juncture. We've even exceeded that to the downside. Um, we hit a 38.2 confluence where we had the 50 marked out, and we've exceeded that. We've touched into a 61.8 golden ratio, and I'm talking now about there potentially being um, a move up in the US dollar. We've got this W formation on the daily chart. Price has moved into the neckline, and if it were to hold at round about 106, the figure, let's call it, if that were to hold, then we could be looking into the pricing balance up into the 108s over the next few days, which would uh, weigh on gold further and send it lower into the uh, target of 1720 and to take on 1700 for a test of that for a continuation to the downside. So that article there is on the website still. If you want to go and check that out, you can just go and type that in. As with the US dollar analysis, that's in the news section. It was done today, whereas the gold analysis was done on Sunday at the start of the week. This was done today on Tuesday. So that's where we are, really. We've got the FOMC minutes coming out, durable good orders before that, Wednesday morning in the US session. So those are going to be the key events for midweek that will potentially dictate the rest of the week, and so forth. In terms of the minutes, then we will be looking for the deliberations around whether or not the Fed are going to be reining in the heavier hikes, and in particular, we'll be interested to know what the consensus is around the terminal rate. So those will be the moving statements within the minutes, I would suspect. So if it's all much of the same, then we might not see much, in it as an event at all, and we can just rely therefore on the technicals and remain with the flow in terms of the day counts and so forth. Speaking of which, we can apply the same sort of analysis techniques that we did to oil. I mean, I wasn't in the market, but I'll just take you through an oil scenario, which was a pretty nice situation. The price being on the backside of this trend, there was a fantastic opportunity. I mean, I talked about it, I think, in previous analysis, with it, being an upside bias, and it sort of gave us that conviction to long it. On Tuesday, I can't remember where I'd done the article, but anyway, going through the market today. So we've got this peak formation, you can call it like a inverse head and shoulders. But the key is the break of this trend, and this is a scenario where we've come into the week short, but we've got this first green day playing out. So we've moved up and we're breaking the highs of Monday's trade. We're on the backside of this trend line. We've got this fierce rejection. So longs are in the market essentially, right? So that's key. And coming into the US session today, we had a flat Asia. We had length in London, and continuation into the New York session, which you can short against. So that was the thesis, and you can draw that trend line. You can see that it's broken over here, and that was the entry. On a 1 minute time frame, we got our peak formation over here. We had this peak formation, and it's about being patient and waiting for these setups. So, I mean, you might have been encouraged to come in. I mean, to come in and buy on this W with that break of structure, with a stop below to run it higher. But this peaked out nonetheless, and once it broke the trend, there was an invitation to sell it. So there was the M formation. There was a micro one in there as well. There was the break of structure. There was the retest of the structure, and the engulfment were these three pins, bearish bars to take a short stop, somewhere within the pins or even above if you want to be less conservative, whatever it might be, and targeting a move into the order block area of this support. So that was a nice trade to start the day with, and then on the break of the structure again with the reverse scenario. Basically, you've got the peak formation, failures to move back. You've got 1, 2, 3 pushes into the lows of the session so far, the pin bar, and forming the W with another pin, and that engulfment of the pin. And then depending on how you manage the trade, but if you were to let it just run, then that was a nice 7R plus the 4R, so a very strong day in oil. Or had you been micromanaging it and taking some off and maybe moving to break even, then you would have come out with considerably less, well, leaving a lot on the table really, but you can't win them all. So you might have taken some off up here. The majority of the trade, perhaps, you're at the highs of the day, anything can happen. You've got length that's coming in. It was a fairly choppy day in markets generally. So not a lot of momentum. It was pretty sideways. However you would have done that, but either way, you would have made some good bread on the day. So leave it there, and we'll see how we get on with the minutes tomorrow.